Well, our market master is ready with us. Kenneth Andrade is founder and chief executive officer at Old Bridge Capital Management. Kenneth, good morning. A pleasure to speak with you here on CNBC-TV18. It's been a while, so welcome back. Let's just, Kenneth, try and sort of understand your thoughts on, very briefly on what markets have done so far, whether it's been, within limits of reasonableness, because markets have done very well, especially the small cap part of the market. Are you uncomfortable with that? And what next, really? Near to medium term, how are things looking?
So, I think markets just reacted to all the good news that's there in the corporate world, right? And if you go back to the quarterly numbers and as they roll out, there are hardly any disappointments that are there in the entire in this quarter numbers, or even if I step back to last year's numbers. So markets effectively reacting to all of that. Now, all said and done, it's been a great 2023 so far, and the undervaluation or some part of the undervaluation that was there in the last year has evened itself out, and some part of the market continues to remain reasonably expensive. So the disappointments, the limited disappointments that you had in results, markets reacted to them fairly sharply, and I think that's the way it goes. Valuations are high, but all the results and all the events that are taking place are fairly positive on as far as corporate India is concerned. So I'm not too worried about the cycle. Obviously, at these valuations, the returns are all pushed backwards, given the fact that everything is trading fairly well at this in today's market scenario.
Kenneth, hi, good morning, and thanks for joining in. But at a time when this market has not seen a major correction up until now, that's the fear, right? That there could be a large correction coming. What do retail investors do at this point in time? Do you take a pause, raise your cash levels, wait for, better times to deploy fresh money in? What's the best approach now?
So as far as the large corrections are there, I think, Sonia, we have already been through one phase between 2019 to 2021, right? And the economy got stress tested during that period. Now, when you stress test the economy, hardly any bankruptcies came through. In fact, the reverse happened. All companies actually cleaned up their balance sheet and everyone became cash positive. So even if you have a correction, my sense is unless there's a significantly large event that takes place, the corrections will be incremental and they will not be very large. Because we know at the bottom of the entire economic cycle, we came through with flying colors, right? Now, the only risk that the market faces is in valuations. And when we talk about valuations also, this is also on context on future growth. And trying to guesstimate future is always going to be a challenge. It's always been a challenge, right? It's not an Excel sheet that you drag towards your right and you get growth. In terms of growth, I think the domestic environment, government spending is right up there. You can see infrastructure taking place, and you can see a lot of other industries actually participating. Because of the trade realignment, I mean, a lot of corporates in India have gone outside. A lot of industries in India have gone outside and gotten incremental market share. Now, how does that translate into large corporate earnings and large reinvestment that has to take place? When I talk reinvestment, I'm talking about the capex side. And some part of that is already visible, but not a very significant part of capex that we require is going through at this point in time. So I think that's where the challenge is. As far as retail investors are concerned, I think the risk on capital is not there. You have to put money incrementally into the market and keep some firepower should there be a reasonable correction. I think that's the approach at this point in time. If you had asked me last year, 2022, there was hardly any risk and valuations were in favor. Today, there's hardly any risk, but valuations are not in favor.
Hi, Kenneth. Good morning. Kenneth, I wanted to ask you about some of these unlocked trades, that have done very, very well. Post-COVID, you've seen a big resurgence in terms of hotel stocks out here. You have the aviation stocks. There's only one big play out there, Interglobe. And the luggage industry as well, a lot of these stocks have done well. Are you all playing any of these themes, or have you all stayed away from any of these?
It's there in bits and pieces, Nigel. And if I look at hospitality as a whole, I think the entire value chain is done reasonably well. It also, it's also gone to a level wherein capacities are just not coming into play at the time where which is required. So the strength in pricing will retain, balance sheet will continue to be there. And you are seeing elements of capex in the entire cycle. You're seeing expansions taking place by every single vertical in that entire chain that is there. So it could take about 3 years or 4 years for new capacities to come in. Till then, the pricing power is in favor of all of these companies. Again, they are trading very close to valuations where they have never traded before. But there's enough of merit to say that some of these businesses will become significantly stronger in the next 3 years. So you can participate. It's a stock-based approach that is there. And I think there is reasonable amount of value. There's still reasonable amount of value in some of these businesses.
Got it. Kenneth, we just spoke with, I think, what has been one of your portfolio companies for a long time, Kaveri Seeds.
Yes.
I don't know if you heard the conversation. I don't know if you still own it, but you like that theme, right? For a long time, agri-commodity businesses, Coromandel, Kaveri, Chambal. Are you still bullish on that space, and in what way? I mean, if you can name names, that will be great.
So, my only concern in that business is that cyclicality has gone on for a little too long. I think 2000, in the seeds business more specifically, none of the seed companies have done very well for now the last 5-6 years. Okay, for the fertilizer companies, I think it's much easier. A lot of them did extremely well. Some of them are trading at their historical highs. But in the seed business, I think hopefully they should come through in this cycle. And it's not just one company; it's the entire industry. Hopefully, this should be the end of the entire cycle, at least for some of these companies. So we like the space in bits and pieces. We've done some exits also. But there is a fair amount of value, but till growth doesn't come in, I think a lot of this industry will still trade where it is.
So you own less of it than say even 6 months ago, right? I mean, so it's not a big bet anymore in that sense. Can I put it that way?
I think, Prashant, the reverse happened. The others have outgrown the size of this position.
Okay.
Yeah.
Okay. All right. Fair enough. Got it. Now, the other space which you liked was, I remember when we spoke last, was the QSR space. Is that something you still are bullish on? Because consumption has been kind of weak, and it's kind of showed through in many of these QSR names as well. Your thoughts?
So they should get their act in order this year. I think there's been a massive rollout of capacity. When I say capacity, in terms of new stores, and all of them are grappling with two things. One is an expansion, and second is also with lower spends in the entire economy. And it's impacted companies which have impacted companies, and it's impacted companies in the discretionary sector. So it's not just QSR, it's also some of the retailing businesses that are there, government retailing businesses that are there. So it's across the board. It's a very stock-specific approach that you probably have to work out there. But all said and done, it's a fairly large opportunity in any developing country that is there, or developing country moving to a developed opportunity. And market caps are definitely in your favor. Okay, from the size of opportunity to where market caps. Now you need patience to go through the cycle. And if you want to capture it in entirety, you have to be early to this space. So it's the first time that the QSR cycle is going through a downturn. It will be interesting to see how many of these companies come through with higher market shares and which category actually wins.
So,
but I definitely.
Yeah. Okay. Got that. I wanted to ask you about a couple of other spaces. Of course, one of the best performing spaces this year has been autos, and there's so much happening there, especially in the electric vehicle category. If someone has not participated yet, have they missed the bus, or is there more to go? And which are the pockets that you would like here?
I think in automotive, you had a terrible period right up to 2021, and a lot of these companies are catching up for lost time. Now it's a size of the market that can only grow. You've come to a level where the market is we're almost at a maturity stage in the market, whether it's two-wheelers, whether it is four-wheelers, and you've got a shift in technology. Now the legacy business in terms of distribution is doing well, and a lot of that is captured as far as valuations are concerned. So there will be incremental growth from there. The new space that you rightly pointed out is the electrical vehicle space that is there, or the change in technology that is there. And a lot of the listed businesses are actually downselling their EV business or the electrical vehicle business to other investors, whether it's private equity or whether it is strategic. So the existing shareholders on that in the business has a lower participation into the electric vehicle business, which is sitting in the companies itself, in the listed companies itself. So I'm not too much in favor in how the structure plays out. I mean, a lot of the larger corporates are diluting their stake in the EV business at the expense of the public shareholders at this point in time. So that may not be the best thing to happen in the longer term for a lot of public shareholding, which is sitting in companies at this point in time. All said and done, it's going to be a fairly relevant sector in India. And if you see how the market is actually shifting, it's steering up in terms of price points, whether it's inflation or whether it is higher realization per vehicle or premiumization of the entire market. I think that trend is playing out fairly well. So you need to be there and you need to capture it. I definitely prefer the vehicle manufacturers to the automotive ancillaries out there. But we'll have to just wait till at least from our perspective, we just have to wait till things get a little better as far as entry levels are concerned.
Okay, all right, Kenneth. Always good hearing your thoughts. Thanks so much for stopping by. Hoping to bump into you in Bandra sometime. We live just down the road. So looking forward, Kenneth. You have a good day today as well.
Thank you very much. Thanks.